Let's go to our CBOE trader, the CBO trader that we always turn to, Prosper Academy CEO Scott Bauer. Scott, I know you've been on the phones, you've been trading. Tell me what jumps out at you about the trade action in these last 27 minutes.
You know, what doesn't jump out at me, Liz, is if I look at the activity in the VIX options right now, it's not out of the ordinary. You know, on a day like today, especially when we saw a spike back up towards that 30 level, we would expect potentially to see a massive amount of call buying. And on any typical day, a normal day, we see a call to put ratio just over 2 to 1, maybe 2.3 to 1. So more calls than puts. And today it's right at 2 to 1. So that's telling me there's not a ton of panic there. And if I look in the SPX pit, which I've been talking to those guys all day today, if I look at SPX options today, on a normal day, we'll see about a 1.3, 1.4 to 1 put call ratio, so more puts than calls, and that's right in line today. So even though we're seeing volatility, obviously, excessive and very accelerated here, we're not seeing a lot of panic buying, at least from the retail side that's coming into the marketplace.
Yeah, that actually echoes what Dan Greenhouse of Solus was here earlier talking about that and said, it may look like a hyperbolic, breathless situation, but you're not seeing that in some of the skeletal structure of the markets. Lost in the shuffle here, Scott, was the PPI, the inflation report on the manufacturing side for the month of February, which came in quite moderate. It matched most of the expectations instead of going way above what we have seen lately, meaning inflation is moderating just a bit here. And we've got it down 0.1% for the month of February versus the estimate of 0.3%. We got the Fed meeting 1 week from today. What kind of bets are you seeing traders make on the floor there ahead of the meeting?
So right now, literally as we speak real time, it is 50-50. The market is pricing in a 50-50 probability of a 25 basis point hike or no hike at all. That has been fluctuating over the last couple of days here. Actually, this morning, it was down to about a 35% chance only of a 25 basis point hike. That has risen back up a little bit. Personally, I think it would be the wrong thing for the Fed not to hike. I know that this is, there's some potential systemic risk out there, but if they want to keep whatever credibility they have left and they want to still follow the path, I think the appropriate thing to do is raise by 25 and change some of the language moving forward. If they react to what's going on right now and all of a sudden pull these hikes off the table, when hopefully this may pass here in a short while here, I really think that's going to do more damage to the overall market.
Okay, let me just pop up if we can. We're calling lots of audibles because the situation is fluid. As I said, Credit Suisse is coming way off the lows here. I know it's just a $2.12 stock, but it was at $1.98 about 11 minutes ago. We do have it still down about 15%, but it was down more than 23% earlier. This is the Swiss bank that was really swooning earlier. Listen, it has had a whole bunch of problems over the past 10 years. Quick response on this, Scott. Credit Suisse, does it need to be bailed out? Is that what you're hearing?
Well, it looked like the Swiss authorities just announced over the last few minutes here that they were going to come in and potentially do what the Fed is here or what Treasury is here, and they were going to provide liquidity. So I think the market is reacting to that positively. Do they need to be bailed out? Eventually, they probably will. I don't know that's going to happen right now, but it looks like it probably will happen.
Okay, but there's this headline. I just want people to know Norway's sovereign wealth fund, it is one of the biggest, has reduced its holding in Credit Suisse to around 1% from 1.49% at the end of last year. I don't know why they would ever, at this point, they still have money in Credit Suisse.
Exactly.
Who knows? Scott, great to see you. Thank you for the expertise and that on-the-ground real feel of what's going on. We're going to come right back.